US non-farm payrolls beat expectations. We see a gain of 372,000 versus expectations of 265,000. So obviously, I'm guessing if you're new to the market, you might be a bit confused to why the dollar is not gaining. So we're going to talk a bit about that. Also going to talk a bit about what we can look at next week. So U.S. labor market report better than expected, at least according to the headline. Wages as well, they increased with 5.1%, obviously not beating inflation. So we're still seeing people losing out, given that inflation is so high in the US. But what we're seeing here in the EURUSD is that actually the price pushing higher after we reached a low here of 1.0072 earlier this morning. Now, some sort of a bounce is perfectly fair given how swiftly we have traded to the downside here. It is normal in the currency markets to have a bit of correction. That's why a lot of people day trade, just because you can get higher returns by getting in and out of the market. So we needed a bit of a correction, and per this descending triangle pattern, we're pretty much almost at target. So it would have made a perfect sense to actually close out that position early today when we reach these lows. Now, if we look at this going forward, we can definitely have a bit of a correction. Maybe we'll head as high as 102.12, but I would remain bearish from that level all the way up to 103.12 to have about 100 pip range here. I think people will try to go short again and then try to target parity, because at the end of the day, the labor market report was good. So realistically, the dollar should keep on gaining. So the Fed heading into the meeting now in July, we're going to be much more hawkish and ready to raise interest rates. Something you want to keep an eye on for next week is probably dollar yen. So dollar yen is stuck in a ascending triangle. The pattern is about 20 days old and has a target of 139.21 yen per dollar on a break to 136.73. If you like this video, don't forget to retweet and don't forget to like. Thank you.